Hello and welcome to the special CNBC Africa broadcast. My name is Nozi Pombandra and I'm coming to you from Addis Ababa in Ethiopia. We're attending Africa Development Week 2016, and this is of course a meeting between the ministers of the African Union and the Economic Commission for Africa. Now, one of the key discussions that came out of today's conversation was looking at how Africa builds resilience against global market forces. We caught up with the chairperson of Mkoba Private Equity Fund, Frannie Leautier, to find out what was the purpose of this meeting that they had with the chairperson of the African Union, Dr. Nkosazana Dlamini-Zuma.
The chairperson of the African Union Commission really launched the challenge to the panelists and the ministers who were in the discussion on how we can actually understand better the crisis that Africa is facing, particularly with low commodity prices, declining demand for many of the commodities that Africa exports, the impact it has on revenues and the debt levels that we are now facing, but also the climate-related risks, including flooding and droughts, and whether what have we learned, how are we managing, are there countries that are doing better and can we learn from them, and how can we be better prepared, not only for the short term but also for the medium and long term. So my task in that conversation was to share perspectives on three key dimensions. The first one is based on a book that I have recently published on leadership in a globalized world, complexity, dynamics and risks, because it really looks at how leaders can develop the capabilities and the tools and the approaches to handling complexity and risk in a globalized world. And the three risks that we were looking at were really impacting Africa not only at the national level but also in the way Africa interacts with itself as a continent and with the rest of the world. So that was the first aspect that I covered, and the books were circulated around to the ministers who were participating for further reading and skill development. The second big component was on suggestions and ideas of where things have worked, including the role that the private sector and investment has played. So the examples that were shared included, for example, the innovations in finance and how through blended finance, public-private partnerships, better using our sovereign wealth funds, pension funds, private equity, and combining these instruments to support small and medium enterprises, the small farmer, and the big companies that can help transform African economies so that we are not so dependent on commodities and not so dependent on agriculture. So the role that the private sector plays in that was one of the things that we discussed.
The collapse of commodity prices is perhaps one of the most distinctive examples that show Africa's vulnerability to the global market and its forces.
The issue of mining is exactly today at where we are in that problematics. You know, the demand for mining products are getting lower and lower. China was the driving force. They have slowed down their economy. This is their tactical decisions. Europe is not really taking off as it was before. US is coming up differently, it's true. But in any case, the demand of our commodities are low. So therefore, companies cannot produce, because if they produce commodities, they sell to whom? So it is a dichotomy. You know, the thing is that's why you have to think about risk very early, when everything is good. You don't think about risk when you have the problems, you know. And what should have been done is, when there is prosperity, think about one day that I will not be able to sell my mining products. I have to accumulate. And then when there is that fluctuation that is in the negative side, my surplus can close it up, you know. And this is what we are facing today. And in doing that, you can build safety nets, you can build pot of resources.
The conversations here at Africa Development Week 2016 have also opened up the opportunity for different voices with different ideas to come to the fore. Now, one of these controversial ideas was the exploration of whether Africa should be focusing on commodity-based industrialization as against the dominant thinking of just diversifying our economies.
Well, you see, we started with a basic argument. we say that we have to stop saying, how do you diversify out of the primary sector, commodity sector? And instead saying, how do you industrialize based on your primary commodities? Because already this is what you have and what you're already exporting. The only problem is that you don't add value to it and you don't gain a lot of benefits from income and from growth and from jobs. That's what the problem is. And before then, people were arguing that if you want to add value, if you want to industrialize in your primary commodities, you may not have the technical capacity. It's very capital intensive, it's this and that and that. But our analysis shows that it is possible, that it's actually doable, and that some countries in Africa are doing it.
Prof, I want to come back to the context that we find ourselves in, where there's been a literal collapse of commodity prices.
Yes.
Is it difficult or harder to sell this line of thinking given the challenges of the current environment?
Actually, this collapse of the prices makes it imperative. This is the best opportunity for no longer postponing it or saying it's impossible. Because if countries had gotten into the higher value chains, they would not be so vulnerable to the collapse of the prices. Because the crude oil may collapse, the price of other oil products are not suffering the same way. You see what I mean? Did you see diamond prices collapse in the diamond that you wear in your ring collapse in the market? The answer is no. But the raw diamonds the prices have gone down. So you insulate yourself from this volatility or this negative effects of price shocks by making sure that you are up in the higher value chain, because that's where you have more stability, and that's also where you can still continue to do something. For example, a lot of the countries here are oil exporters, but they import fuel, they import gasoline, they import kerosene, they import finished products. So they have a domestic demand for these things.
Yeah.
The only thing is that they are not transforming it so they can sell to the domestic market. So if the global market is not working, you at least have something to fall back on.
Changes in climate and weather patterns have also meant that there has been new and increasingly complex problems that have come to African markets. The recent drought still has many African economies reeling and many still trying to recover from its effects.
The challenge we have is that new crises have come on board, and I think the one we have not handled as well is removing ourselves from the dependency on weather. And therefore the impact of climate change is hurting us, not only in agriculture because of the drought and floods, but also cities who are hurt when there's flooding, and of course the energy sector that is depending on hydroelectricity. So these correlated risks are what are causing a huge headache for many countries. And then the other area we have not progressed as well is in developing bigger regional food markets.
The insurance sector and its products has been identified as perhaps one of the most effective interventions that could see the lowering of Africa's risk profile.
Penetration of insurance at smallholder level is a big challenge. And the reasons are very clear. Because insurance is expensive, farmers are poor. And the insurance companies have to weigh how much it costs them to get to that farmer who is very far there, and will it be profitable for him? And these are the two problems we have. So the best solution today that is foreseen really is to use sovereign insurance approach. The system of ARC is about analyzing climate, looking at the population, overlying poverty, and looking at the water requirement of plants, and then producing an index. On the basis of that, government can decide, I'm insuring 1 million people because the data projections have shown me that there is a risk in a specific area, and we can do it on a 10 kilometer by 10 kilometer. And then these people are covered. Then when the payout comes in case of drought, for example, you can tell the farmer, look, why don't you pay 1/3 of the contribution of this if you want to be covered? It is an insurance the other way around, coming from the government on top. I won't say the name of the countries, but there are very, very big countries that insure their farmers 100%, and try to compete with us on the international market when we have only small means. So therefore, this way of supporting supporting farmers is really the beginning of real and true insurance.
Despite these challenges, there have been positive developments, especially on the macroeconomic front. African leaders have focused on fiscal management, and this has allowed for a strong base of which many of these challenges can be tackled.
Africa did a tremendous job in macroeconomic stability for 15 years, and that That's what has underpinned the growth that we saw in the last 15 years, and even the very quick rebound from the financial crisis. And I think this is what is helping Africa going forward, even with the low commodity prices and the declining demand. That meant very solid inflation management, solid currency management, incredible fundamentals in the macroeconomic sphere, and then being able to bridge all of those with a smart approach to debt management.
Well, it has been reinforced that Africa certainly does not live in a vacuum and will always, to some extent, be susceptible to global market forces. But how do we build buffers that ensure that African economies, at the very least, have a fighting chance? Thank you for making the time to join us. From myself, Nozi Pombanjwa, and the team here in Addis Ababa, Ethiopia, thank you for joining us.